Our next guest says housing market problems, they're only going to get worse as we head into the fall months. Michael Fetter is the CEO of Radar Logic. He's here with me in New York. And it's not just the question of sales themselves. Where it really impacts the consumer is the price they get for the thing they still own, the price they get if they try to bring it to market. When we look at these data points today, the median price decreased nearly 5% from July of 2009 to where we are right now. Does that match what you're seeing in your research?
Well, it's a little different in terms of the way the government does their calculations. They do median home prices. We do price per square foot, but the trends are clearly the same. Our price per square foot for our national composite figure is basically at the same level it was in January of 2009. And the most troubling element from our point of view is that we're coming through the end of the summer now, the summer being the real peak in the housing sales cycle.
It's supposed to be.
Well, it's supposed to be, and it clearly has not been. So as we go into the fall, with the massive overhang of unsold homes, of homes with financial distress, the ones that are already foreclosed, likely to be foreclosed, offered out as short sales, there's just no incentive for a buyer to pay up and grab a house. The market's moving in the buyer's direction.
And when you look at the figures we got yesterday with existing home sales, the percentage of those that were in some ways not even actually sales, because 22% of them were foreclosures. We had short sales as well there. Explain to me how the question of foreclosures factors into pricing. I mean, isn't it a longer time to actually get the house off the market when it's sitting there at foreclosure? How is that skewing perhaps our visibility into pricing?
Well, the real issue is not so much what happens when the house goes into foreclosure as it is when the lender who's foreclosed then sells it. We've been tracking what we refer to as motivated sales within our observations for the last several years. And we saw the percentage of these motivated sales increase into the high 20s, low 30% of total. And more importantly, we saw the discounts for those homes, again, this is in our daily RPX price per square foot, but the discount for what we call motivated versus all other got to be as much as 30–35%. So as consumers, home buyers, think about buying a house and they hear about foreclosures and they expect more foreclosures, they know perfectly well that if a house is foreclosed, it will sell for a big discount versus one that's not. And it was as early as a year and a half ago that we heard stories about California realtors taking buyers out on buses looking only at foreclosed homes. So the impact is that the more likely to have greater foreclosures, the more buyers are going to perceive prices will fall.
See, when we talk about the housing market, and we talk to a lot of economists, a lot of experts on that show, and I hear, two arguments. One is that it's only going to get worse from here when it comes to prices. The other is that prices and sales are doing two very different things. In fact, while sales continue to decline, prices are somewhat stable, and they haven't gone down further. Is it possible that they can continue to be bifurcated?
It is possible, but again, as we look at the data, and we do really look at it differently from all of the other housing indices. We really track as if it's a spot market at point of sale in unit of measure called price per square foot. As we see it, what we're seeing, two trends that are worthy of noting. One, people are buying smaller houses. That will have a tendency sometimes to push up price per square foot because the total purchase price isn't as high. Okay. The other trend that we're seeing, of course, is that the West Coast tends to lead what happens in the country. California boomed first, it busted first, it stabilized first. It is already starting to decline again. So I think, median home prices, the notion that transactions can fall off, but prices will stabilize.
Right.
If you get to the point where there are only 2 or 3 transactions, it may be special situations. Our own view is that if volumes continue to weaken, prices are going to fall.
And that is going to hurt the consumer's own sense of net worth, their own ability to be able to spend. It's just a cycle that feeds through. Thank you for your perspective today, Michael. I appreciate it.
Pleasure, Margaret.